The Sphere arrived on the Las Vegas skyline as a colossal, shimmering orb, promising to redefine entertainment. Its futuristic design and sheer scale instantly captured the imagination of locals and tourists alike, standing out even among the city's legendary neon lights. The anticipation was electric. Everyone wanted to see what this technological marvel could do. For a brief, dazzling moment, it seemed to deliver. U2's residency launched it to global acclaim, drawing fans from around the world. The opening nights were a spectacle of sound and light, with social media buzzing about the Sphere's mind-bending visuals and immersive audio. It was hailed as the future of live entertainment, a venue unlike any other on the planet. Inside, the vast wraparound screen became a viral sensation, enveloping audiences in a 360-degree world of color and motion. People described it as stepping into another dimension, and videos of the experience racked up millions of views online. The Sphere was more than a venue, it was an event in itself, but less than 2 years after opening, the dream is teetering on the edge of a financial abyss. Despite the initial hype, cracks began to show behind the scenes. Ticket sales slowed, operating costs soared, and the pressure to keep the spectacle fresh became relentless. Investors and analysts started to worry. Could the Sphere's business model really sustain such an ambitious project? The shock, a potential bankruptcy within its corporate family, Sphere Entertainment, has sent tremors through the industry. News of mounting debts and missed payments spread quickly, shaking confidence in the entire enterprise. The possibility of bankruptcy isn't just a financial story, it's a warning sign for other mega projects chasing the next big thing. The crisis isn't from the Sphere itself, but from its sister company, MSG Networks, a once profitable regional sports network now dragging the entire enterprise toward a possible Chapter 11 filing. As cable TV revenues declined and sports rights costs soared, MSG Networks became a financial anchor, threatening to pull the Sphere down with it. The Sphere, a marvel of immersive experience, now faces a fight for its financial life, a cautionary tale about the risks of mega-projects and tangled corporate empires. Executives scramble to find solutions, but the stakes are higher than ever. The fate of the Sphere could reshape how the industry approaches innovation and risk. As the world watches, the question looms: can the glowing globe of Vegas survive the gaping wound in its own financial house? Or will it become a symbol of ambition outpacing reality, a cautionary tale for the next generation of dreamers? To grasp the crisis, you have to understand the audacity of the Sphere. Towering over Las Vegas, it's the world's largest spherical structure, wrapped in a programmable LED exosphere that turns it into a viral landmark and advertising powerhouse. Inside, a 16K wraparound screen and state-of-the-art audio immerse over 18,000 spectators in a sensory experience unlike any other. Haptic seats, wind, temperature, and scent effects push the boundaries of live entertainment. The Sphere was built to host concerts, immersive productions, and sporting events, commanding premium prices and attracting the world's biggest acts. The vision, a venue so extraordinary, the economics would naturally follow. But the current crisis reveals that even the most ambitious projects can be undermined by financial realities lurking within their own corporate structure. The Sphere's future now hangs in the balance. The Sphere's journey from concept to reality was breathtakingly expensive. Originally budgeted at $1.2 billion, costs soared to $2.3 billion, making it the most expensive entertainment venue ever built in Las Vegas. Custom 16K screens, 167,000 speakers, and advanced engineering drove costs sky high. Every element, from haptic seats to climate systems, added millions. To justify this outlay, the Sphere must generate hundreds of millions in profit each year, not just revenue. The enormous investment set a financial benchmark so high that anything less than spectacular earnings spells trouble. Now the bill is coming due in ways no one fully anticipated. Despite sold-out shows and global buzz, the Sphere's financial reality is sobering. In late 2024, it generated $169 million in revenue, but posted a $108 million operating loss in just 3 months. The venue's technological complexity means sky-high operating costs, from powering massive LED screens to staffing and maintenance. Sphere Entertainment, the parent company, reported a $231 million net loss over 6 months, with MSG Networks compounding the pain. The Sphere isn't yet the profit engine it was meant to be. Initial excitement and premium pricing haven't offset the monumental costs. Persistent, 9-figure losses are unsustainable, and the financial markets are losing patience. The urgency is mounting, especially as the MSG Networks crisis threatens to drag the whole enterprise down. The Sphere's future depends on turning the spectacle into sustainable profit, fast. The immediate bankruptcy threat facing Sphere Entertainment doesn't actually come from the Sphere itself, but from MSG Networks, a once mighty legacy sports network now in a dramatic freefall. Once a staple in millions of American homes, MSG Networks is now struggling to survive in a rapidly changing media landscape. The rise of streaming services and the relentless wave of cord cutting have decimated MSG Networks' subscriber base. In just the past year, the network saw an 11.5% drop in subscribers, a staggering loss that has sent revenues into a tailspin. As more viewers abandon traditional cable for on-demand platforms, MSG Networks finds itself unable to keep up with the pace of change. The financial picture is grim. Last quarter alone, MSG Networks posted a $35 million operating loss, a number that highlights just how dire the situation has become. Meanwhile, the company is saddled with a massive $829 million debt, which officially came due in October 2024, putting immense pressure on its already strained finances. With no way to pay off this mountain of debt, MSG Networks faces a final, non-negotiable deadline in March 2025. If the company fails to refinance or restructure its obligations by then, Chapter 11 bankruptcy will be unavoidable, marking the end of an era for the storied network. The collapse of the traditional cable TV model has turned MSG Networks into what's known as a negative equity asset, meaning it's now worth less than the debt it owes. Once a valuable property, the network's assets have been devalued to the point where they can't even cover its liabilities. These mounting losses, and the looming threat of default, don't just spell trouble for MSG Networks, they threaten to infect the entire Sphere Entertainment empire. The financial instability could ripple outward, impacting other ambitious projects and investments. The fate of the Sphere, a symbol of futuristic entertainment, is now inextricably linked to the slow-motion collapse of a business model that belongs to a bygone era. The contrast between old and new has never been more stark, or more dangerous. The internal rot at MSG Networks threatens to bring down even the most innovative and forward-looking ventures, serving as a stark warning of how quickly fortunes can change in the volatile world of media and entertainment. How does a struggling New York sports network endanger one of the most ambitious entertainment projects in Las Vegas? At first glance, MSG Networks and the Las Vegas Sphere seem worlds apart, one rooted in the tradition of East Coast sports broadcasting, the other a futuristic marvel lighting up the Nevada desert. But beneath the surface, their fates are tightly intertwined. The connection is their shared parent company, Sphere Entertainment, which oversees both the legacy sports network and the cutting-edge Sphere venue. This corporate link means that financial trouble in one arm can ripple across the entire organization. As MSG Networks teeters on the edge of bankruptcy, the consequences are immediate and far-reaching. The threat of default has sent shockwaves through the company's stock, eroding investor trust and making it harder for Sphere Entertainment to raise new capital or fund future projects. Legally, MSG's debt is ring-fenced, so creditors can't directly seize the Sphere or its assets. The Sphere itself remains protected from immediate legal claims tied to MSG Network's obligations, yet the indirect fallout is severe. Sphere Entertainment's plummeting stock price, distracted leadership forced to juggle crises, and a growing narrative of instability. This uncertainty can scare off top artists, event organizers, and business partners, making it harder for the Sphere to book shows or secure sponsorships. Some analysts believe the only way forward is to sever ties with MSG Networks entirely, cutting away the debt-laden division to protect the Sphere's future. This could mean a formal spin-off or bankruptcy restructuring, allowing the Sphere to operate independently. If successful, such a move could free the Sphere to focus on its high-growth potential, attracting new investment and creative talent without the baggage of MSG's financial woes. While the crisis is undeniably dangerous, it also presents a rare opportunity, a chance to shed the burdens of the past and secure a brighter, more independent future for the Sphere. The decisions made in the coming weeks will be critical. The next moves will determine whether the Sphere can break free from MSG's sinking ship and chart its own course toward success. Beyond the boardroom, there are signs the Sphere's initial public excitement is fading. While major concerts still sell, its flagship cinematic show saw a 7% revenue dip last quarter. Ticket prices have dropped, and more seats are going unsold, a stark contrast to the opening months. The novelty is wearing off, and the challenge now is to generate repeat business in a city packed with entertainment options. Declining per-show revenue suggests the venue may have overestimated demand for non-concert content. With huge operating losses, any drop in revenue adds pressure to the path toward profitability. The Sphere must prove it's more than a one-time gimmick if it hopes to survive. Despite the storm clouds, CEO James Dolan remains defiantly optimistic. He touts strong artist demand and global expansion plans, with rumors of new residencies and a second Sphere in Abu Dhabi. Dolan insists the Sphere's struggles are just growing pains, not a flaw in the concept. But the market is skeptical, and the MSG Network's debt crisis looms. The most likely outcome: MSG Networks files for bankruptcy, letting Sphere Entertainment cut loose its toxic asset. For the Sphere, the next year is a race against time: cut losses, attract blockbuster residencies, and keep its shows fresh. If it can turn a profit while shedding MSG's baggage, it could emerge stronger. But if losses continue and partners flee, the future could get much darker. The world's most advanced venue is now the star of its own high-stakes financial drama.